All right, good afternoon, everyone. So we are doing our first Straight Talk Live. I don't think I formally announced it on YouTube or Facebook. Of course, our clients do know this. Switching over to a registered investment advisory firm gives us a lot more flexibility to do events like this. Most importantly, as we always have done, educate and communicate. So Michael Loftus, Loftus Wealth Strategies, also Wealth and Wisdom TV. So today, what are we going to talk about? A couple things. Bonds. What the heck is going on? Is this the beginning of a correction? I think you might know the answer to that one already. And Bitcoin, the line in the sand. Yes, I'm actually going to speak about Bitcoin, not something I normally do. So first up, what's going on with bonds? Now, when you look here, very strange, okay? We had a big move to the upside last week. I mean, how big was this move? Well, to give you an idea here, here is a post from Jim Bianco Research, does a great job. And as he said, the 10-year last week finished its worst week in 42 years. This is completely unprecedented. If I were to show you the 30-year, it's 57 years, the last time it had a week this bad. So what's going on and why did this happen? Simple. I put out a video last week. What is our number one concern? The Fed, of course, right, for 2022. Now, in December, the Fed told us what they were going to do. We, as a firm, started adjusting to that, buying bond proxy assets, doing some other things, preparing ourselves for the rate hike. The problem is the market did not believe it. So last week you saw this scramble, okay? And you always hear me say the bond market is the leading indicator, smarter than the stock market, okay? So, and when we get to the stock market, we'll talk about that, you'll see why, okay? So last week there was a big shift in the overall bond market. Now that being said, I think it was completely overdone. I anticipate, based on our research, for this to come back, okay? Unrealistic. We've got some big reports this week we'll talk about. I think that's going to get us better into our overall range. So what else? Let's take a look real quick at SPY, which is the S&P ETF. So what's going on here right now? Let me pull up my markup, be able to mark a couple things up. So what happened today? Big time reversal. Let me go ahead and zoom in on today. Oops, let me get rid of that one first. Okay, this is a big reverse candle is what we call it from a technical analysis standpoint. So that is a very good sign. The other thing is, folks, perspective. As of right now, we are less than 3% from our all-time highs in the S&P. So yes, a little bit of pain, more pain in tech. We'll talk about that. But for now, I don't think that this is anything major. Now, when you look at some overall, some other items, okay, right here, important, relative strength held to 50. Let's see if it stays on there tomorrow. That's a nice level of support that we look for. Now, momentum crossed over, absolutely not a surprise based on these last couple days. But this, again, if you know our process, price, volume, volatility. Volatility went above 20 today, sneaked above it, but closed below. So the volatility isn't there. Wasn't there last week. Definitively not there today. And again, had some real nice reversal on the overall S&P. So next up, let's take a look at what's going on with the Qs, okay, the NASDAQ 100. So same thing here. Let me go down. Where's my markup page? All right. Oh, I don't want to do that. Let's hold off on that one for a second. Move up a little bit. So we've had some more pain in tech. Big time pain. Why? Because of the bond market. Now, if you go back in history, I don't have this chart. I put it out on Twitter the other day. I mean, it's being overblown big time, okay? people say, oh, you know, when rates go up, tech gets hit. It's just not the case. Okay, so definitely overblown. Same thing here. If I'm looking at anything of concern, okay, yeah, a bigger drop. Okay, that's number one. Potential, boom, boom. That could be considered a classic head and shoulders, bearish potential, but you can see support, right? I mean, support is about as evident as possible. All of those are good signs. Same thing here, okay? Here is the volatility index for the NASDAQ 25. You're going to have more volatility in tech, so a little bit different from our S&P volatility index that we follow. But when you look at that, not too bad. So overall, I mean, when I take a look at things, I said this to a client today, I think today as I look at it, definitely overblown, okay? Not worried about it. We'll talk about our game plan in a second. So let's just hold off on getting a little crazy here on everything that's going on. Next up and last up is Bitcoin. Yes, Bitcoin. You have never spoken about Bitcoin, Michael. Wasn't allowed to when I was in the independent world. Now as an RIA, Registered Investment Advisor, can pretty much talk about whatever I choose, including in the individual equities and ETFs like I have today. So, big time drop, right? Not uncommon, all right? You saw some highs over here, you drop, we peaked here, and we've dropped, okay? One thing about Bitcoin, no surprise, volatile. Everybody should know that getting in. Now, I have a video, I've done the script or all the research coming out shortly, okay, talking about is Bitcoin a big investment for, say, Gen X and baby boomers? We know Gen Z and millennials love it. I do believe with some caution there. Now, that being said, the lines you see here is what's called the Fibonacci retracement. Not going to get into that, but as you see, I mean, almost to a penny, it stopped. That line in the sand, it held today. That is what's called critical support. So that is a good sign for Bitcoin. Now, that being said, make sure you do subscribe and watch us. One thing we have a concern of, if we go to what we call cycle 4, not a good cycle, do anticipate going there because, yes, short term, I think we get a little bounce here, but it's coming, right? With this Fed hike and whatnot, it's going to be challenging. Bitcoin, we feel, will not do well in that time. So will we jump into it? Probably not right now. We look at 3 different areas, 3 weeks or less, 3 months or less, 3 years or less. Those are our trends, okay? And right now, all trends, or excuse me, the 2 most important trends have been broken, which are short-term and mid-term. So until we see a trend change here, which is probably really about here when you look at the Fibonacci's, I'm not going to be getting near Bitcoin again. I'm not a hodler. Hold on for dear life like a lot of folks. So, game plan, what are we talking about here? For now, as I said, I think it was overblown last week. We're seeing some strength today, nice volume. Okay, overall, that being said, mention it's coming. Okay, so sell into strength, especially the high volatility tech. We definitively have been seeing a shift into value assets, what I'll call defensive assets, utilities, consumer staples, things like that, gold. Okay, we are seeing a shift there. We have started to shift there. So sell into strength, raise some cash, and let's see what goes on from here. Also, monthly video at the beginning of the month. We'll be doing live shows like this on the off weeks. And in the middle of the month, we put out educational videos. So please make sure that you do consider subscribing, hitting a like button, depending on where you're watching us right now. Thanks for watching. Michael Loftus, Wealth and Wisdom TV.